With this session update, I'm Shannon Lurkey. Neel Kashkari, president of the Minneapolis Federal Reserve Bank, joined members of the Senate Finance Committee this morning for a robust discussion covering a range of topics, including federal stimulus checks, economic recovery from COVID-19, employment, and education. Here are some highlights.
We have made progress in Minnesota and nationally in getting people back to work. The headline unemployment rate in America has fallen to 6.7%, and the Minnesota unemployment rate has fallen to 4.4%. But that masks many, many people who have left the labor force because they've given up. And so they're not counted as being unemployed. So if you look nationally, we think by our estimates at the Minneapolis Fed, the true unemployment rate nationally today is around 10%. And that is still as bad as the worst labor market during the financial crisis of 2008 and 2009. So we have made some progress. That's good news. But we are a long way away from having restored our economy and restored our labor market, most importantly, and putting Minnesotans and putting Americans back to work.
You think the unemployment's around 10% right now? And the pre-pandemic level was 3.5%. That's a big jump that we have to somehow manage. And we have talked about the labor force, the retirements, women in the labor force. How does that all intersect, and how do we get people again back out there?
So it's still a terrible labor force, and as you know, it's very unfair how it's been applied, right? It's not been across the board evenly. People like those of us on this call, myself, been able to work from home. We haven't been that affected by this, whereas it's been disproportionately impacting the lower paid workers, the service workers. And by the way, those are the folks who can't work from home. And those are the folks who, even if they were managed to keep their job, they have to go in person to work, whether it's the grocery store checkout person or the person who's working, stocking shelves. So they're also exposed to more healthcare risks from catching the virus and maybe spreading the virus. So it's been a deeply unfair pandemic on many, many dimensions. And I guess I would just say we need to just continue to give support to those people through the unemployment programs, through the small business programs, continue to give support to those Minnesotans who've been directly affected by this pandemic.
I watch the news a lot and try and get a fair idea of what's going on with these checks that are coming from Washington. And certainly they're very well received, especially if you receive one. But I'm wondering overall if you can give us an idea what that has done for the economy. I mean, has that taken the edge off of near disaster? What's your opinion on that?
I think the one-time checks, so I'd carve it into two categories. One is the enhanced unemployment benefits that the U.S. Congress has provided. And those are meant to be targeted to people who've lost their jobs. But as we've analyzed it, even though those are very generous and they're targeted, the U.S. economy is so big and it's so complex, you still miss a lot of people who for whatever reason aren't able to access the unemployment system or don't access it. And so those one-time checks, we actually think complement the unemployment benefits because it's like spraying water. It's like a fire. You're trying to put out the fire. You spray water to make sure you get all the embers. Now, I recognize that one of the criticisms of the checks is it goes to some families who don't need it, right? They kept their jobs. They don't need the one-time check. And I get that, but nobody has figured out a way to really target the people who really need the assistance and make sure you get all of them. So I think the one-time checks complement the unemployment insurance because they're much more widely spread. And the families that get the checks that don't need it, they tend to just pay down debt with it. So it doesn't actually lead to a big boost of inflation. So I do think the checks are important. And another reason they're important is they've helped families pay their bills. It's not really about economic stimulus where you're trying to stimulate the economy. It's more about helping families avoid insolvency so they can pay their car payment or they can pay their credit card bills or they can pay their rent. And that's why if you look at the banking system has actually done fine in this pandemic because Congress has helped families pay their credit card bills, pay their car loans, pay their mortgages. If they weren't able to pay those, you'd see those losses rolling up into the banking system.
The personal savings have seen a $2 trillion increase. And then credit is incredibly cheap and accessible. I mean, it's all, how does this going to interact? Are we we need to start spending too, don't we, to get this economy going? And
those of us that have managed to keep our jobs, we tend to be the higher paid workers anyway. And we're saving more money because we're not going out to restaurants, we're not traveling, we're staying home and we're going to the grocery store.
Mm-hmm.
So we're all saving more money. So we're actually, economically speaking, better off. What's happening? That money we're putting in the bank, and that money then becomes available the way the US economy works and the financial system works. That actually flows back into the bond market, and that actually makes it easier for the US government to then borrow. So in a sense, the extra money that we're saving is in a way financing the extra deficits that the US government is funding to support our fellow Americans who got the short end of the stick and the ones that are really being hammered by this pandemic.
The debate is obviously very politicized right now in Congress. I love your thoughts about the size of those checks. What difference does it make if it's a $600 check, a $1,400 check, or a $2,000 check with regard to the economy?
I don't have an economic analysis to say what is the right number, because when I look at it, what is the purpose of the checks? To me, the purpose of the check is to reach those people who, for whatever reason, who should be collecting unemployment insurance, who should qualify, but for whatever reason don't. And the research is very clear that it tends to be lower income workers, less skilled workers who, for whatever reason, aren't able to collect unemployment benefits. And so you want to give them some support. Now, of course, if somebody has lost their job for 6 months or a year, I mean, what's $600 going to do for them? I mean, it's going to help. It's better than nothing, but it's not going to be that much help if they have to pay rent and they have to put food on the table. So in that sense, you'd want to go bigger because you want to get those people assistance to bridge them over for a longer period of time. But then the pushback is, well, it's a very blunt instrument and you're going to send this money to a bunch of people who already are collecting unemployment benefits or who didn't lose their job. And so I wish I could give you an answer, Senator, on what I think is the right number. I think that is really, unfortunately, a political judgment call. And I don't mean partisan politics. I just mean it's a call for legislators to use their judgment on what they feel right.
One of the things that I'm very concerned about right now is with the amount of cash that's out there, are we seeing some inflationary effects?
We have a goal of trying to hit 2% inflation a year, and most central banks around the world have a similar goal. One of the perplexing things for us is that over the past 10 years, even before the pandemic, we kept coming up short at around 1.5% inflation. And it's actually been a challenge for central banks to actually achieve their 2% inflation target. And so we're not seeing right now, inflation has fallen because the economy is running below potential right now. So many people are out of work. Inflation is running much below where it was before the pandemic. It's something we watch very, very carefully and how to have a lot of different measures of inflation to make sure we're getting a complete picture. So we're not seeing inflation now. And we have readings of people's expectations of future inflation. So it turns out if we all believe that high inflation is coming, it tends to be a self-fulfilling prophecy because then we go to our employer and say, hey, I need a raise because prices are going up. And then it becomes a self-fulfilling prophecy. So one of the things that economists pay a lot of attention to are people's expectations of future inflation. And we can read that by surveying people, and we can also read that by some pretty complicated financial market measurements. So we're not seeing signs of high inflation now or even in the future.
I read an article today that says Blacks are being denied mortgage refinance as on an average of 30.22%, far more than whites. And so my question to you is, if that is true, can you tell me what we can do to help banks get over consistent discrimination that we see for people of color, especially in light of the fact that we have the lowest interest rate, and that impacts their ability to survive and to plan and to generate wealth?
One of our roles in regulating banks is making sure that they are providing access to credit fairly in the communities that they serve. And so I'll give you just a very specific thing. If you have examples of constituents that come to you and say, hey, I should have qualified for this refinance and I was denied and it's not fair, send them to us, call us, and we will have our bank examiners look at it and try to get to the bottom of it. That's the most tangible thing I can tell you. You know, we take this very seriously, and we want to hold banks accountable to make sure that they're treating their customers, regardless of race or regardless of color, regardless of religion. We want to make sure that they're treating all of their customers fairly, and we'll use whatever tools we have available to do that.
Any thoughts on what you're seeing as far as strategies to bring people back to work, to lower the unemployment rate, raise the labor participation rate? Because what we're hearing anecdotally from employers is that they've got help wanted signs out, they can't find people. So it feels like we're in a little bit of a conundrum here. How do we, any thoughts on what states are doing well to spur investment at this time when rates are low? Just some general thoughts as local policymakers.
I hear those anecdotes too. Whether it's directly the businesses that I chat with or elected representatives who hear that from their constituents, both state representatives and federal representatives. But if you look at the aggregate data, there's no question that there are far more people who are out of work than there are businesses that are looking to hire. And I got to tell you that even before the pandemic, I had started to grow very skeptical of the businesses' complaints that they couldn't find workers. I mean, I know at some level it has to be true, right? Because our demographics are what they are. We're not having kids as fast. Our labor force is not growing. So at a national level, it has to be true. But businesses are used to finding workers readily available and wages they're used to paying. And what interesting thing happened for the last 3 or 4 years before the pandemic. Businesses kept saying, we can't find workers. It's a worker shortage. And then I would always ask them, well, are you paying more? No. Well, why don't you pay more? And then they'd be able to find the workers. And so there's something very emotional for businesses about workers. Here's what I mean. If the price of steel goes up and a business needs to buy steel for their business, they shrug their shoulders. They're not happy about it, but the price of steel went up. So be it. But if they can't find workers at yesterday's wages, oh my gosh, it's a worker shortage. There's just no workers out there, instead of actually just paying up. And so I've kind of lost my sympathy, because business has been making these arguments for so many years. To argue right now when the real national unemployment rate is 10%, they're saying they can't find workers. Maybe you ought to try a little bit harder.
What can we do in the state to, Senator Pratt's point, to stimulate our local economy? We have great companies. We want them to continue to hire and be able to excel. A lot of people obviously working from home, but what levers are the most appropriate? And maybe there's a lot of them, but maybe there's one that we can get a bigger bang for our buck.
I mean, a few things come to mind, top of mind. One, you talked about childcare. A lot of childcare providers are home-based, and rebuilding that sector of the economy so that provides work for those folks who are working in that childcare center, whether it's home-based or a more formal center. But it also then enables other people to go to work if they can have affordable childcare. So I think there are things that you could do at the state level, both through funding, but I think also through policy to help jumpstart rebuilding the childcare sector in Minnesota. And by the way, I already know Minnesota, the legislature has done a lot to support the childcare industry in Minnesota, more than most states have done. So I would continue to say that that's an important effort going forward. That's one. Another topic that has not yet come up today, which is enormously important at the federal level and the state level, is the availability of broadband across the state of Minnesota and across the country. I mean, we knew that was important before the pandemic hit, but boy, we sure know how important it is now.
Exactly how much are employers supposed to do, I guess. And I don't mean to be flippant at all, but they pay property taxes, they pay income taxes. Minnesota has some of the highest state contributions to education, and people are still either not graduating or they are not literate in some basic ways, some basic executive function. And I don't mean CEO function, I mean show up for work, know how to write a complete sentence, put your phone down and be able to work for 8 hours. An employer can take someone who's willing to show up, who has basic communication skills, and pay for their training to be a welder, a machinist. They can help them learn to function in some of our medical device industry, operating in clean rooms to assemble medical devices that change the world. But exactly how much are they supposed to be willing to invest in people who didn't graduate, didn't learn to read? don't show up on time. And so there's part of an employment gap that has some more fundamental things than just training and a willingness for an employer to do their part.
I agree completely with the spirit of your question. You're absolutely right. That's actually the conversation that I have with employers to say, look, we can train somebody if we have confidence that they're going to show up every day at 8 o'clock and work, an 8-hour day, and they're reliable and they've got the basic communication skills and the basic executive presence skills, just the basic functioning that you talked about. So you're absolutely right. And that's where I think, and I'm glad you raised this, we've done a lot of work at the Minneapolis Fed on education, whether it's early childhood education, which the Minneapolis Fed has been a champion of for a couple decades now, or more recently, our work in K through 12. I do think it is absolutely paramount that Minnesota addresses the terrible education outcomes that so many Minnesota kids are getting, because it's not reasonable and it's not going to happen to say, well, employers need to teach you how to read, right? That's not reasonable. We need to make sure that all Minnesota children are graduating with the skills necessary to contribute to our society and our economy and our democracy. And that's why former Supreme Court Justice Alan Page and I have proposed amending the Minnesota Constitution to create a civil right for every child to get a quality public education. And then very importantly, making it the highest priority of the state to make sure that that actually happens.
We know that there are things that are working and we can do more of. Full service community schools, for example, have shown great promise, tremendous results. But we need to be able to do more. And they also are there to help address some of the non-academic challenges that our kids are facing. Trying to get more teachers of color into our classrooms. That is a long-standing challenge. I am so grateful, for Governor Walz's work with a number of stakeholders within education to really start trying to address some of these problems. So this is hugely important. But I just think it needs to be said that yes, our schools have to be the best, but we also have to recognize that they cannot solve all the problems that our kids are facing.
The schools cannot do everything. The economic environment, the neighborhood, there are all these other factors, socioeconomic factors that are really important too. I couldn't agree more. But I would also say, we don't just look at what Minnesota is doing. We look at what the country is doing and what other states are doing. And there are states that have made real progress and they have poverty too. I'll give you an example. And this is remarkable. In the late 90s, Minnesota and Florida were roughly equal in terms of education disparities, racial disparities, in the mid 30s by some measures out of 50 states. Florida amended their constitution to create a civil right for a high quality education. And then the governor and the legislature came together and passed sweeping reforms. They shrunk the class sizes, they invested more money, they invested in teacher training, they did a whole bunch of different things. 20 years later, this is not 100 years, 20 years later, Minnesota is exactly where we were in the late 90s, in the mid 30s by this measure, and Florida is 6. They climbed almost 30 spots in 20 years. And so I would just humbly say it is doable. And the most powerful tool we have to break the cycle of poverty is actually education.
Shouldn't we be very targeted, since we are doing our budget this year? Shouldn't we be very targeted, mindful of how what we're spending our money on, and the subsequent, the rate of growth just in our state budget?
We do want to be targeted, but I would just say from my own experience, in 2008, I was at the U.S. Treasury Department under both Presidents Bush and Obama. And we had a number of housing programs to try to reach homeowners who needed assistance. And we tried to be very targeted because Americans were mad that their neighbor or their brother-in-law bought a house they couldn't afford. And they said, don't you dare bail out that guy, he's a bum. So we tried to be very targeted to reach deserving families who just needed a little bit of assistance. You know what happened? We ended up not helping very many people. And it's just the nature of a very complex society that we have, that the more you try to be targeted on the front end, you'll be targeted, but you may end up missing a bunch of people who actually you want to help. And so that's the balancing act. I don't have a perfect solution for you. I would just say, during the pandemic, I view this as a wartime scenario, that the US government has the resources to support the American economy and American families. So we should be aggressive there. But then once we get the pandemic behind us, then absolutely, we need to return to more traditional budgeting, more traditional views on fiscal policy.
To continue following these issues and more, watch legislative coverage Monday through Friday on the PBS Minnesota channel or visit our website, www.senate.mn/media.